I'm joined on the phone from Jakarta by Fatih Birol. He's chief economist at the International Energy Agency. Welcome to you, Mr. Birol. I know you're joining us here from the Pacific Energy Summit in Jakarta. Now, you were on the program on February the 2nd, just over a week into the Egyptian uprising, and then you told us you didn't see any threat to oil supplies and you hoped that the markets would calm down. What's your latest assessment?
I mean, when we look at the Middle East and North African countries, there is definitely a turmoil, and this has implications on the market in terms of increase in the prices. But when you look at the market fundamentals, demand and supply, there is not much reason to justify these level of prices. There is significant amount of spare production capacity in Saudi Arabia and elsewhere. And when we look at Libya, the most significant oil producer among the countries where there's a turmoil, the production, affected production is about 100 to 200,000 barrels per day, which is very little in terms of having a major implication on the prices. And on top of that, if there was a physical disruption, serious physical disruption, the International Energy Agency has publicly held stocks at the level of 1.6 billion barrels, and this may well be released if we see there is a need to do that. So I think when we look at all the factors, the prices what we have now today is too high to justify these levels.
But clearly, Mr. Birol, markets are concerned that this is going to spread. Are you concerned that we could see Iran, perhaps the unrest there, leading to some problem in the Persian Gulf or the Straits of Hormuz? What about Saudi Arabia? Bahrain is right next door. Could we see the unrest spreading?
It is very difficult to forecast the geopolitical events in that region or, for that sake, anywhere in the world. But when we look at our estimations in the next 10 years, more than 90% of the growth in the oil production need to come from Middle East and North African countries. If there are major disruptions which could have long-lasting effects on oil production and oil investments, definitely this is not a good news for the oil markets and the oil prices.
Now, last time you were on the program, you said that oil over $100 a barrel could derail the global economy, particularly the recovery in the U.S. and Europe. Do you now see that that threat has increased?
Definitely so. I think since we talked last time, we had a couple of data in hand, some of the inflation numbers coming from UK, other European countries, and some trade balance numbers coming from United States and Europe all indicate that this level of high prices is a major risk for the economic recovery in Europe, in US, and elsewhere.
All right, we have to leave it there. Fatih Birol, chief economist at the International Energy Agency. We thank you very much for being with us.